On to West Africa now. Ghana has maintained its key policy rate at 13.5% to try and boost economic growth in the West African states. Now, the central bank cut its lending rate from 14.5% back in May down to 13.5% in June as the economy steadily recovers from the disruptions caused by the COVID-19 pandemic. With the details, here's CGTN's Nabil Ahmed Rufai.
Ghana's central bank is keeping the interest rate at 13.5% for the second time since June and is the lowest rate in nearly a decade. Analysts say this will help in the country's economic recovery.
Banks will be able to lend out at a cheaper price to businesses. Businesses can have access to cheaper funds. They can expand their businesses. Once the businesses are growing, there's room for hiring, of course, digging into the unemployment issue, so they reduce the rate of unemployment.
The central bank says it maintained the lending rate at 13.5% due to increase in the cost of goods and services. Inflation increased from 9.0% in July to 9.7% in August. Ghana's economy has recorded a slower growth than the level before the pandemic, despite a recovery in the services industry. The government says the country's economy grew by 3.9% in the second quarter of this year as compared to 6.9% in 2019. The government had projected the country's economy to grow by 5% by the end of this year, but analysts say that may not be possible.
Looking at all these anticipated expenses as a result of this COVID-19, for me, some of these targets will be very hard to reach, right? It doesn't mean that we should aim for them, but it's going to be difficult.
Still, the central bank says it hopes the success of Ghana's vaccine rollout could further open the economy. The government also plans to rein in spending, so it reduces its fiscal deficit from 13.8%, which was recorded last year, to 10.8% of GDP this year. Nabil Ahmed Rufai, CGTN, Accra, Ghana.